Millions of workers heard no tax on overtime, but that does not mean every overtime dollar is automatically tax-free. So who qualifies, and what does the rule really say? Let's break it down. First, what it really is. No tax on overtime is a new federal deduction for qualified overtime pay. Not a rule that erases all tax on your overtime. It runs for tax years 2025 through 2028. And here's the catch most people miss. Only the extra half of your time and a half counts. If your regular rate is $20 an hour and overtime pays $30, only the $10 premium per hour is qualified overtime, not the whole $30. How much? You may deduct up to $12,500 of qualified overtime if you file single, or $25,000 if you file jointly, and you can take it even if you don't itemize. Who qualifies? Generally, this is for non-exempt workers whose overtime is required under federal law, the Fair Labor Standards Act, for working more than 40 hours in a week. Think nurses, warehouse and factory workers, retail, hospitality, and construction. But here's what doesn't count. Overtime that's only required by your state, your union contract, or your employer's own policy, not by federal law, generally does not qualify. And the regular part of your overtime pay doesn't either. Just the federal required premium. And not everyone qualifies. The deduction phases out at higher incomes. It starts shrinking once your modified income passes $150,000, or $300,000 on a joint return. And this is the big one. No tax on overtime only cuts your federal income tax. Your overtime can still be subject to Social Security and Medicare. Payroll taxes don't just disappear, and your state may tax it differently. How do you claim it? Your qualified overtime gets reported. For 2025, it shows up on your W-2 in Box 14, labeled Qual OT. Then you claim the deduction on the new form, Schedule 1A. From 2026 on, employers report it separately. And here's where it lands. This is the actual Schedule 1A from the IRS. Part 3 is the overtime deduction. Your qualified overtime gets reported, then deducted right here. Quick examples. A warehouse worker paid time and a half can deduct just the premium half, up to the limit. A worker earning over the phase-out sees the deduction shrink. And if your employer didn't clearly report your overtime, you may need that reporting before you can claim it. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience. So the rules you're hearing are checked against the IRS sources. Always educational, never advice for your specific situation. So the plain English summary, no tax on overtime is a deduction, up to $12,500 or $25,000 joint, of just the federal required overtime premium for 2025 through 2028, with income limits claimed on Schedule 1A. Payroll taxes may still apply, and your state may differ. This is general education, not tax advice, so check with a pro. Subscribe to the Tax Breakdown for tax rules in plain English.